Hey guys, my name is Alexander Garcia. Most people just call me Alex. And I want to welcome you today to my real estate YouTube channel. It's actually my first video, so I'm pretty excited here. The purpose of this channel is to help my clients, friends, and family understand the fundamentals of buying real estate. And in case you're wondering, I've held a California real estate license since 2006. I've personally sold hundreds of homes in my career. And I'm not trying to toot my own horn, but I'm sure you can agree with me that it's imperative that if you're going to learn or you're going to work with a realtor, they better have some excellent credibility, some good experience, and enough time in the field to know what the heck they're talking about. So let's dig a little further. The steps to buying a house might seem complicated at first, particularly if you're a first-time home buyer. However, whether it's your first time in the real estate market or you're an experienced homeowner who's maybe bought once or twice and just wants to brush up on your skills, I've got you covered right here. So with that said, as one of my favorite characters, Nacho Libre, once said, let's get down to the nitty gritty. So I'd like to start with the most common question I get asked so very often, probably every week. And that is, Alex, what do I need to do to buy a home? What steps do I need to take to prepare myself? And this, my friends, is an excellent question. So we're going to dive right in. I'm going to make this very simple and practical for all of you listening. There are 4 simple steps you can begin doing right now to start paving your way to home ownership. So let's start with number 1. Number 1, you need income, obviously. So whether you're employed or self-employed, before the bank loans you money, you need stable income and a stable job. What that means is the bank's going to want to see that you've been working for the last 2 years in the same line of work. Now, there are some of you out there who might not be able to work or can't work. So yes, there are other options to claim income. For example, if you're receiving income payments for a settlement or a lawsuit, if you're receiving Social Security income, alimony, life insurance, or even if you're receiving the gift money or inheritance income, those last 2 can get a little tricky and complicated with the banks. But bottom line, you want to be working. With that said, you will be required to provide the bank with the last 2 years of your tax returns. So if you're behind with filing your taxes for the last year, you better jump on that ASAP. All right. So let's move on to number 2. Number 2 is building your credit score. Many of you probably heard the word FICO score thrown around a lot. Credit score, FICO score. It's the same damn thing. All right. Now I know most people cringe at the sound of the words credit score, but please don't. You got to get used to loving them. Credit scores will always be around and are detrimental to any type of financing you will do for you or your family. So start getting comfortable with keeping your scores healthy, guys. Now, what is considered a healthy credit score? The million-dollar question. And what score do I need to get the very best interest rate? So I'm going to break it down into 2 categories, which is exactly how your bank is going to view your scores. Those 2 categories are subprime and prime scores. Now, please keep in mind, each bank has its own criteria, but today I'm speaking to you in generals, which is as accurate as you're going to find. So prime credit is ideally where you want to be. Subprime credit is the lower half of the table where you can still potentially qualify for a loan, but not with the very, very best interest rates and terms. So to be considered having prime credit, you'll need the credit to be around to be a 620 to 799 range. If you are within the 620 or 619 to 580 range, you are considered subprime. And unfortunately, anything less than 580 will typically not get you a home. Now, if you ask me where the bread and butter is, where you really want to be to get the best rates overall, I'd say shoot for at least a 740. This is generally considered excellent credit by most banks and will allow you to get the very best interest rates, potentially saving you a lot of money. So for more info on boosting your credit scores, you can also check out my tips for increasing your credit score video on my YouTube channel. So now let's move on to number 3. And this is a very big question. How much money must I save? There are 3 categories of expenses you will need to save up in order to buy your home. These 3 expenses are A, down payment, B is your closing costs, and C is your upfront costs. So let's start with expense A, down payment. Down payment really comes down to what type of loan you'll be using to purchase your home. Now, the standard first-time homebuyer loan is the FHA loan. The FHA loan requires a minimum of 3.5% down. Now, if you can afford to put more money down, I'd recommend applying for the conventional loan, which is normally about between 5 and 20%. You can put a little more down if you want, but that's generally the percentage that you put. However, realistically, for most first-time home buyers, that can be fairly challenging. But if you can do it, the benefits and savings of using a conventional loan far outweigh that of the FHA loan. Now, lastly, if you're currently active or previously military, you can take advantage of the wonderful VA loan, which is 0% down. This is the only loan that allows for no down payment, aside from city grants, which we can discuss later. So we're going to go to expense B, your closing costs. You've probably heard that word thrown around a lot. Your closing costs are your overall general expenses when buying a home and can add up to about 3% of the purchase price. The fees include your bank charges, or origination fee to do your loan, the escrow fees, and also the title fees. Now, the title company helps with running a title report and making sure there are no liens on your future home, no liens, and also ensure that the title is ultimately transferred from the seller to you. All right. These closing costs also include prepaid mortgage interest, taxes, and a few other small miscellaneous fees, notary fees, state, county transfer taxes, recording fees, et cetera, et cetera. And then finally, our last expense C, is your upfront costs. These fees are paid within the time of closing on your home, and the expense can range from about $1,000 to $1,500. Also include all of your home inspections and your appraisal, which are all buyer's expenses, by the way. All right. So just to reiterate again over the overall expenses of buying a home, those include your down payment, your closing costs, and lastly, your upfront costs. All right. So we're going to move on to the fourth and very last step to buying your dream home, and definitely the most important in finding, and that is finding an excellent and experienced realtor and loan officer in order to help you throughout the entire process. So of course, I'd love to earn your business, but if you already have a close friend or family member, then I'll leave you with 3 very important qualities I personally believe your realtor should embody. So one is at least 10 years of experience. Trust me on this. Number 2, an excellent source of reviews or referrals from past clients. And number 3, the realtor is familiar with the city that you're looking to buy in. So with that said, folks, I want to thank you for tuning into my YouTube channel today. If you found this video useful and insightful, all I ask in return is that you like and subscribe to my channel right now by clicking the subscribe button below. And don't forget to share this video with others who could possibly benefit from it. Thanks again, guys. This is Alexander Garcia. Have a blessed day.